What's up everyone, it's Kadi with Money Investing. In this video, we are going to be talking about my second biggest position, and that is going to be Meta Platforms, ticker symbol Meta, or formerly known as Facebook. And they're reporting earnings next week on Wednesday, I believe. So Wednesday is going to be April 26th. So after the markets close, they are going to be reporting their numbers for the first quarter fiscal year 2023. And in this video, I'm going to break down everything you need to know: their balance sheet, their margins, their cash flow, their earnings, the DAUs, MAUs, and the 6-7 different things that I will be paying attention to for Meta ahead of the earnings. And of course, not to mention, go over the technical analysis on this company as well. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. And you can also join our Discord and our Patreon community. We've got a little bit over 3,700 members from all over the world, and we're talking about fundamental, technical analysis, macroeconomics, stocks and options pretty much every single day. And there is a 16% annual discount that you can also take advantage of till the end of this month, and after that it will expire. I think there's only a few more spots left, so link's going to be down below. So first things first, let's just quickly dive right into these segment results. Now, Amazon is going to report on Thursday after the bell, and Microsoft and Google are going to report on Tuesday after the bell. On Tuesday, so April 25th is Microsoft and Google, and Amazon is going to be on Thursday, and Meta is reporting right in the middle on Wednesday. Apple is not going to report until the first week of May, so they usually do report in this week, but it's a little bit odd that they are reporting separately at a different time on May 3rd, I believe, May 3rd or May 4th, and that's going to be in line with the Fed meeting as well. So it's going to be pretty packed. Next 10 days are going to be filled with earnings, economic data, and not to mention the Fed meeting as well. So when it comes to Meta, advertising revenue in the fourth quarter was just over $31 billion, and their family of apps revenue, which is kind of accounting for all the apps, right? Instagram, WhatsApp, Messenger, Facebook. So they kind of combine all that together, 31.4 billion. And Reality Labs is pretty much their metaverse initiative at 727 million as of fourth quarter. So total revenue came in at $32.1 billion for the company, and operating income, as you'll notice, in the fourth quarter was $6.4 billion. The quarter before that, $5.6 billion. The quarter before that, $8.3 billion, and the quarter before that, $8.5 billion. So the entire 2022, they did have declining operating income, and specifically, if you take a look at their operating margin, that was a very, very high at, in 2020, 2021. So 46%, 43%, 43%, then dropped down to 36, 37, 31, 29, and then 20%. I mean, we really have come down. We've been cut more than half in operating margin. And the main reason for that for Meta, obviously, is the bigger spend on metaverse, right? So that pretty much has resulted in a pretty substantial amount of expenditure, and you'll notice that in the future slides. But this right here is the expenses as a percentage of revenue for Meta. It's always been a problem of cost, right? It's never really been about the core business problem. It's never really been about the competition. Yes, to some extent, there's always been these headlines with TikTok competition, all that stuff, and Meta has somewhat struggled with Apple's policies and TikTok's competition, but it really has been mostly when it comes to the numbers, right? The numbers, the data, the numbers have always been about the cost. That's really what Meta's problem's been, and that's kind of like a self-inflicting wound where they've decided to spend a lot of this money on their initiatives with the metaverse and AI and everything that they're building, and they're taking a hit in the short term with earnings. So if you take a look at expenses as a percentage of revenue, this right here, the middle number, which is research and development, so R&D, you'll notice in 2020, that was at 19% of revenue. And that number went up to as high as 30%, in some quarters, 33%. When it comes to general administrative expense, it went from 6-7% all the way up to 10-12%. And cost of revenue has also gone from 19 to 20% all the way up to 26% in the fourth quarter 2022. So that is the main primary reason as to why operating margins have come down from 46% down to 20%, because the company itself has been spending a ton of cash on the metaverse. Of course, Mark Zuckerberg's been very much focused on that initiative. Now, we know that he's since come out and mentioned that, they're going to do some cost cuts. They're going to be very efficient. They're going to be very lean. They're going to be laying people off. They're going to be doing some adjustments to make sure the company focuses on the present while also, capturing the future, while also making sure they've got a place in the future. So that's really the focus, and Mark Zuckerberg's already mentioned that time and time again, and as a result, the stock price has responded to that. Investors have responded to that. And this is the net income. Of course, it's been declining significantly since the fourth quarter 2020, from 11.2 billion that quarter all the way down to 4.6 billion. So if you compare this number from 2 quarters ago, it's been pretty much cut in half, more than half, over 50-60% decline on a 2-year basis. This right here is diluted earnings per share, so very similar to net income. Diluted EPS has also come down from 388 all the way down to 176 in the last, 8 quarters for the company. This right here is going to be CapEx. So again, you can see that, right? I mean, it's all been a cost problem for the business. And you can see fourth quarter 21, the expense was 5.5 billion, and that was jumped to over 9.2 billion in the fourth quarter. And from 2021 of 19.2 billion to over 32 billion dollars in CapEx for the company, right? So they obviously have been spending a ton of cash. What really happened was in 2020, 2019, they did really well, like in terms of advertising, because everything was work from home, right? So people were flushed with cash, they were buying, and as a result, companies with all this easy money and all the lower cost of borrowing, companies plowed money into advertising, and as a result, a lot of these companies did well. Google, Netflix, streaming companies, advertising companies, including Meta, lots of time spent on Instagram, Facebook. So as a result, they flushed themselves with cash, and then they wanted to make use of that cash. Was it the right decision to go after the metaverse? Yes. Was it the right decision to spend that much on the metaverse? No. So I do still think that Meta has to go after this market because Apple's going after it. Amazon's going after it. A lot of companies, Google's going after it. There's a lot of companies that are dedicated for the metaverse. So yes, this is a market that Meta needs to be in, but can they do better with the return on investment? Do they need to spend $10 billion a quarter? I don't think so. I think they can get it done with less expenses, less capex. So 32 billion, and of course, Mark Zuckerberg has tried to pull back from that, vision. The vision still stays, but the expenses are starting to come down, which is a good thing. Now, this is where the core business comes in, and this is still doing really well. You've got family daily active people. So this is going to be a family of apps, right, in billions daily active people, which is including Messenger, WhatsApp, Instagram, Facebook, every single app, to over 2.96 billion, so almost 3 billion people. And this right here is going to be monthly active people on the family of apps. So again, you can see that we define monthly active person as a registered and logged in user for one or more family products who visited at least one of the family products through mobile device applications or using web or mobile browsers. So family of apps are defined as all the apps that they control, and 3.74 billion is the number, consistently growing on a quarter-over-quarter basis. So that is really good for Meta. This right here is going to be that family average revenue per person, $8.63 from fourth quarter of last year. It is a little bit of a decline. But from fourth quarter 2020, it is a very slight increase. It's more or less flat as the advertising market stabilized a little bit after the pull forward during COVID as well. This right here is Facebook daily active users at almost 2 billion. Again, consistently growing quarter over quarter. Even in the US and Canada, they're now sitting at much higher levels at 199, almost 200 million people in the US and Canada. So, there's always this assumption that nobody uses Facebook in the US or Canada. Well, the numbers are right there. The numbers are right in front of us. And I also mentioned this back in October when I was traveling in Europe. I've mentioned this time and time again, but a lot of people were either on Facebook or WhatsApp or Instagram. Very rarely did I find somebody on TikTok. This right here is going to be monthly active users, MAUs, 2.9 billion for Facebook specifically, growing quarter over quarter. And this right here is going to be that average revenue per user for Facebook. First quarter, remember, right after the holiday season, it is a little bit of a decline. The numbers do come down because the holiday season's over. Advertisers are not as motivated to spend on advertising as they were during the fourth quarter when there's Christmas, Thanksgiving, New Year's. So this number will come down, but right now worldwide they're sitting at 1086, and US and Canada is almost at $59 per user in advertising average revenue. This right here is going to be that consensus for the upcoming earnings. Again, 426 after markets close is when Meta is going to be reporting their numbers, and $1.95, $1.97 is going to be that EPS. It is expected to decline on a year-over-year basis, and revenues pegged at $27.6 billion. And Meta, we have seen about 15 upward revisions. There's been a bit of a flip in story after Mark Zuckerberg's already pointed out they're going to be very efficient, lean, focusing on cost savings, cutting employees, laying people off. So 15 upward revisions. That's pretty significant, right? This is going to be the margins. Again, very strong margins for the company so far, although we have seen the declining margins in operating margins and of course net income margins over the last 8 quarters, and that could switch very soon. Just think about it for a second, right? If Meta was able to continue on this core business strength while at the same time be more efficient and cut down on cost, and is able to regain those margins, EPS is going to absolutely explode to the upside, and the stock price is going to reflect that, right? At one point, stock price for Meta was at over $300 per share, and it's possible to get back up there if, of course, EPS, and that's, again, it's a little bit of an unfortunate situation because on one hand, you've got somebody who's focused on the long term, the visionary Mark Zuckerberg and of course Elon Musk and everybody else, but then Wall Street oftentimes they look for short-term prices, short-term EPS. Same thing happened with Tesla's earnings call, right? Tesla, Elon Musk pretty much mentioned everything that Wall Street did not want to hear, right? They mentioned the margin are going to come down. They mentioned that prices are going to keep getting cut for their Tesla vehicles. That is not what Wall Street wants to hear. But look, Elon Musk doesn't care. He doesn't give a single, you know what I mean? So, and the reason is because they're focused on the long term. Wall Street's focused on the short term. CEOs and management, they're focused on the long term. They're not playing for the quarter. They're playing for the decade. They're playing for the century, right? So it's like a different game for them, right? So, and that's the unfortunate truth. I mean, if Mark Zuckerberg is kind of playing the game Wall Street way, which is, cutting costs and making sure that EPS is in line. So short term, yes, the stock's going to be rewarded, but they got to still figure out a way to how to make sure that they are still present in the long term in the company, right? They got to carve out a place for themselves in the long term with AI, metaverse, and all the technological advancements. Now, when it comes to net debt, again, the company's balance sheet's phenomenal. Over $40 billion of cash, a little bit under $28 billion of debt. Net debt sitting at negative $13 billion here. So very strong current ratio, quick ratio, and debt to free cash flow. This right here is going to be the valuation. Now, valuations have moved up for Meta a little bit. We're now trading at 21, 24 times earnings. It was not too long ago when this stock was trading at about 10, 12 times earnings. It was really, really cheap, so it has moved up over 100%. Price to sales trading at just under 5, enterprise value EBITDA trading at just a little bit over 12, and price to cash flow trading at just over 10 to 11 times. And this right here is going to be that earnings expectation for the future from $9.74 all the way up to over $19 per share. That's going to be a compounded annual growth rate of about 14.5%. And that number has really, really changed up. If you guys know, I mean, if you've been tracking Meta with me on the channel, this number was nowhere near close to being over here. I mean, 26% growth next year? Come on. Investors were expecting as low as 8 to 10% growth for Meta not too long ago, and now the script has pretty much flipped. And the tables have turned, and now analysts are expecting 14.5% growth for the future for Meta. Now, these are some things that my focus is going to be on: the earnings, daily active users, monthly active users, average revenue per user, the revenue, the earnings, and the guidance, of course, the core business strength with respect to family of apps and how the average revenue per user is doing with respect to family of apps. Reels monetization, very much a main focus for Meta, and how they're able to monetize on the existing user base. Reels is really competing heavily with both YouTube Shorts and, of course, TikTok. WhatsApp business chat, this has been very popular in Asia and, of course, in Europe as well. How are they planning to monetize this? AI and the metaverse, what type of future can we expect from Meta in those spaces? The cost and the CapEx, is that going to come down? Is that going to continue to come down? Layoffs, they've been doing them, and what we can expect moving forward for margins as well. So these are some of the things that I will be paying attention to for Meta when they report their earnings next week. Now, if I go over the intrinsic value, let's just go with 14%, right? 14% is the consensus. I'm going to go with 20 times P multiple. We're going to go with 12% discount rate, 10% margin of safety, and minus 1% in share buyback because the company has committed some capital to buy back shares. And we end up with a fair value of about $177. It's right now trading at $212, which means 16%, a little bit above our fair value. And this is going to be that sensitivity grid where you can once again come back and check and see whether higher or lower growth rates, higher or lower P multiples, and how they change the fair value for the stock. Now, I'm very objective. Like, if you've been following me for a time, you know that Tesla, Meta, like, these are some of the big positions that I have, but I'm still not going to make the numbers seem like the stock's undervalued, right? I mean, I could easily go with, let's say, 20% growth rate for Meta and make it seem like, oh, 229 is the fair value, so it's undervalued right now, right? I'm not going to do that, even though I am invested, even though my bias is a little bit on the long side. Still going to give you straight and in an objective manner. And in the past, back in October, we were talking about how Meta was undervalued. And today, I can confidently say that based on the analysis, Meta can be considered a little bit on the more overvalued side. And that's simply because it's rallied over 100%, and the valuations have obviously gone way much too high, too much too fast. This right here, 150% rally from back in November. And this is the entire technical analysis where we are now starting to trade sideways a little bit. We are getting a bit of a rejection at 222. So this right here, resistance, we're starting to pull right back down. Support level is going to stay put at 198, so closer to $200. That right there is going to be that level to watch for Meta moving forward. And of course, resistance all the way up to $222 per share. So I hope you guys enjoyed this video and a complete update on Meta. We are a little bit on the overbought side, so we are overdue on a potential pullback. So my fair value is going to stay put in the 170s, 180s, I would say. Flexibility range does suggest as high as 186. So 186, and of course, when you compare that 198 support, it's going to be in line with in and around those levels. But of course, if Meta continues to report some good numbers, and we see Mark Zuckerberg once again playing the game of Wall Street, which is cost reduction, lean and efficient focus, and EPS coming in strong, and the guidance coming in very good as well, it's possible the stock can pop and we can break past 222. So I hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. All the links down below, and the 16% annual discount also available till the end of this month. It expires in about 7 days, so you can take advantage of that while it's still here. As always, happy investing. I'll see you all in the next video.